Good morning, or I guess early afternoon. Yeah, it's about quarter after 10 UTC on Thursday the 15th. Looking at the local structure, just getting everything ready. Yeah, we had a nice pop into that upside liquidity. It looked like we wanted a short squeeze, and then instantly we started rejecting it as the New York market started opening up, creating some nice bearish divergences in a lot of metrics, and then obviously started sweeping as all of the longs started getting taken out. Nice little Bart Simpson pattern. Since then, since we started breaking down again, everyone looking to hold the low, not looking at the priority, they started longing into the lows, and we started this grind down move until now we've got into some very heavy long liquidity still building below us. Looking at a bit of a higher time frame as far as that's concerned, we're still it is technically like distributing a bit. Obviously, since that breakdown, we had the ability to potentially go higher. We've now failed. I don't think we've quite created a new low there. So yeah, technically still holding, but the liquidity of the downside is getting very thick, down to about 57 and potentially lower. But there's definitely levels to test at this structure if there's a further breakdown. It's the clearing of this structure that we don't want to see, because then we should see a nice move really strong into the 55K zone, as there's quite a bit of stuff to retest in these areas. But overall, yep, to be expected. Liquidity is still building shorts the upside. That's fine. We can continue playing out this pattern. Levels obviously we don't want to lose. The 55K loss will force a retest to the absolute lows. So again, a little bit optimistic here just because we've been grinding down, but this is because mostly people have been trying to long into the lows instead of actually seeing the structure break that we saw lower time frame above from yesterday. So nice little nasty liquidity grab. Didn't have enough juice to get the short squeeze higher, unfortunately, but still now looking for some potential retest on lower time frames. Looking at long short ratios, just where we've kind of been, I'll put it down to a lower time frame, but from yesterday, we saw obviously as the market started heating up, long started coming in very strongly after we started nuking. So that's always a bad sign, is that when the price actually drops down, and then we see retail, which is a lot of Binance users, right, long short accounts, uh, Binance longs coming in very hard, and even now they're 70% long, which is wild. So. Waiting for some type of reversal there. We're still seeing really grindy downside price action currently in the local time frame. And then also massive dump of data coming in. So for the UK side, a lot of GDP data came in today. No change as expected. The last 2 days with CPI data and PPI data for the US came in actually pretty bullish for the markets. So the stocks are actually rallying from it as they were lower than expected. That means it's bearish, negative, or downish for the currency, and pretty decent for the market. All of that's kind of still pointing now for a potential rate cut. We'll see what happens in September. But the big one everyone's looking at, obviously, retail sales are an important one, but initial jobless claims are going to be the next big one. The only difference I would say between this and the CPI data that we came in is that if we have higher than expected jobless claims, it'll actually be potentially bearish for the currency. Comparatively, if CPI PPI data, as we saw yesterday, came in, let's see, came in bearishly, this was actually bearish for the currency. So coming in above that is actually bearish for the currency, which means if it comes in above the initial jobless claims 236, then it's technically bullish for the markets. So keep an eye on that. That's the only kind of like inverse correlation there. Anyways, looking over at trading view, or excuse me, trading light first. I'll look at a couple resting orders. So just looking at the way things broke down, yeah, major flush out. People started trying to buy into the longs really heavily around 59.5, looking for a local hold. That continued to grind down now until we've seen some pretty heavy shorting, but still people's trying to throw in longs to catch the higher low. So as long as we got people stepping in with pretty large positions, a lot of people jumping in, what was that, 58.2, 58.3, yeah, but it's still potentially fuel for the downside. The volatility is not crazy with the order amounts. Obviously, this was the big one. If we do start gaining above because of the tens of thousands of shorts in here that are still in position, they haven't been taken out yet, we would want to see price action actually start to trade back above this level, back above 59.5. If we start getting that, then we have to start targeting like 60, potentially 61K to start really punishing some of those shorts that basically shorted at the low. So keep an eye on it. That's definitely an important level to flip overall. If we look over, I'm going to go a little bit lower time frame so we can see the heat map. resting orders. So the yellow lines are being shown as 200 Bitcoin or more if they're yellow, and obviously smaller amounts of orders like holding price up, but for the most part, nothing really in place. As we broke down, we saw like a pretty consistent increase of orders that were put in to kind of force price lower. Below us, there unfortunately isn't a whole lot of localized support, just a couple layers of stuff, really building a bit about 57.5. We're a bit overdue for a little correction back to the upside, but I'm going to wait until we start flipping some major levels. You can really cleanly see 58.6 on the 15-minute, like this level here, as a pretty important level to start gaining back above stuff. But we're waiting for that kind of round bottomy structure. It's still grinding down. Like, this kind of grindy down structure is designed for one reason and one reason alone, and that's to trap shorts. Or, excuse me, trap longs. There you go, trap longs. As far as the value areas here, yep, failures that went lower, obviously really nasty yesterday on the New York Open. Bearish retested the previous structure, failed underneath previous higher lows, and basically forces off a cliff. Currently, yep, we're still early in the day. Value area is there. I would want to see some kind of like sustained price action above before I start flipping bias. Local bias is technically down until we start regaining some of these levels. The big stuff to put out of position, like I said, is up here at 59.5. That's kind of like, even on the local footprint, I would imagine there'd be quite a bit. So yeah, there's a lot of shorts in here that are completely going unpunished for the most part in the local structure, and then late shorts as well. So keep that in mind. Going over to trading view for the plan. So plan is, yeah, we're still expecting kind of grindy downside price action structure. There's quite a bit of support locally at 57K. I would expect if we just continue grinding it down, that'd be a nice place to see a bounce off of. I'm not really confident in it yet, but it'd be a nice place if there's some continuation bounce. Yeah, BTC rejected 61.4 really hard. We actually had the liquidity grab before we started nuking off a cliff. And we need to gain that if we want to head back towards 65K, in my opinion. The gain of 61.4 is the major continuation up. The loss of 58.3 forces potentially 55K retest. We're kind of at that level right now, and I'm not quite sure if that's correct. I want to say 55K. I'd say if we lose 57K, we're looking for a 55K retest. The only thing to invalidate the local downside is that I want to like a really strong drive up, into some resistance, kind of invalidate this supply zone, this blue, like purple shaded area here, and then create some higher lows that regain the weekly, and that'll give us a nice strong weekly open regain to maybe push back up to retest these levels. You might get a snap rejection down, which is still likely, but if you are able to catch the higher lows, if that's the case, like if we do have this regain, definitely worth a punt based off of risk reward, and that's definitely an area for profit taking. The flip of that, obviously, gaining this at any point, you could just continue the squeeze to the upside. Shorts are still building at the upside, which is good. And the higher time frame still looks okay. It doesn't look great, obviously, since we did have some breakdown, but from a very, very high time frame perspective, we just flip on the daily here. Yeah, the close was bad. That's like the one thing that's got me kind of irked, is that we've actually closed that daily low really rough, and now we've created some really hard potential resistance zones above us. But if we do have that local loss, that kind of continuation down, you just want to see sweeps of the weekly coming back down, settling around 55K, where there's some nice levels to retest on the much higher time frame. But overall, I'd say in this local area, in the general kind of gist of things, still grinding down right now, waiting for some type of more significant regain of level. And for that to happen, we have to see an invalidation of this local supply zone around 59.2-ish, 59, just call it 59K to 59.3. So until that's invalidated, we've got pressure to the downside, and that should be the priority locally until there's basically a regain of level. So that's that. Take it easy. Catch you tomorrow.